So I'm in trade review mode, and this is what our chart will look like when we finish setting up the indicators in this strategy. We will be using 3 indicators. This is a fairly simple strategy, and traders of any skill level can take advantage of it to explain this strategy, and I will be using a Bitcoin chart on the 15-minute time frame. Now I will quickly remove these indicators from the chart to explain their settings from the very beginning. First of all, we will add the main indicator of our strategy to the chart. For this we will go to the Indicator Search tab and find the TDI indicator. After that we will select the indicator created by J. Donovan and add it to the chart. This is a TDI indicator, which stands for Traders Dynamic Index. This is an advanced indicator. However, the principles of its operation are actually quite simple. The indicator displays and combines several indicators, allows you to simultaneously read the mood volatility and market momentum. The first indicator, of which it consists, is the RSI indicator. The indicator in TDRS is used for determine the strength of the trend. Then moving averages are used to smooth the lines. Finally, Bollinger Bands are used to assess the volatility of the market. To understand how we can use the indicator, let's first look at how indicators are integrated into the TDI indicator. The red line here is an RSI indicator, which can be used to determine the strength of a trend or for determining whether the market is oversold or overbought. The green line is a simple moving average which has been applied to the RSI indicator and can be used to determine whether the trend has changed or not. The orange line is the basis of the Bollinger Bands indicator. This line is also commonly known as the Bollinger Band average. This line is usually used to determine the general direction of the market and moods. The last 2 lines integrated into the indicator are the upper and lower Bollinger Bands. These lines help to assess market volatility by showing the amplitude of fluctuations. Now let's change the indicator settings to optimize it for working with the strategy. To do this, let's go to the Indicator Settings tab and go to the Inputs tab. First we will change the RSI period to 13, then we will change the band length to 34. Finally we will change the Fast MA on RSI to 2 and the Slow MA on RSI to 7. Make sure you follow these settings carefully to get the best results from this strategy. Now let's change and target indicator settings. Go to the Style tab, then turn off Slow MA. You can also change the opacity and saturation of the lines to make them easier to see. That's all we needed to do. Now let's see how you can use the indicator to enter positions. By the way, if you don't want to analyze prices yourself, you can join my free group on Telegram. There I share with her daily open positions for buying and selling. The link is in the description under this video. The first way to read the indicator is to look for the intersection of the middle orange line with the red line, and if the red line intersects above the orange line, this indicates the beginning of a long-term buying trend. This signals that you can safely enter a buy position. If the red RSI line intersects below the orange line, then this indicates that the market has entered a longer-term downtrend, which indicates that a sell position should be taken. Despite the fact that this method works well, it does not include the upper and lower Bollinger Bands. A good way to read the TDI indicator is the way which includes Bollinger. For this you need to look for moments when it jumps above or below the Bollinger line. This allows you to dynamically search for overbought and oversold zones. When the RSI indicator crosses the upper lines of the Bollinger Bands, it is considered that the market is overbought, which means that it is a favorable time to sell. To enter a buy position, the RSI indicator must cross below the lower Bollinger Band, which indicates that the market is oversold, and here we can enter a position to buy. As you can see, entering a position using this method works quite well. However, false signals are still generated. To avoid these false signals, we will add 2 more indicators to the chart to complete the strategy. For this, we will open the Indicators tab. The first indicator that we will add will be the exponential moving average, so I will find the EMA indicator and add it to the chart. The second indicator we will add to the chart will be the triple exponential moving average, also known as TEMA, so I will find the TEMA indicator and select the indicator created by the trading company. These were all the indicators that we will use for this strategy. First, we will change the indicator settings, and go to the EMA indicator settings, and go to the Inputs tab, change the length to 200. After that, we will go to the Style tab. Here we will change the color to white. Now we will go to the second indicator settings, with first change the length to 200. After that we will go to the Style tab. Here we will change the color of the indicator to yellow. That's all we needed to do. Now that our chart is set up, let's look at the rules for entering a buy and sell trade for this strategy. Therefore, to conclude a purchase transaction, certain conditions must be met to ensure a high probability of success. The first thing we pay attention to is the closing of the red RSI line on the TDI indicator outside the lower Bollinger Band. This indicates that the market is currently oversold and may soon reverse. Secondly, we need the price to touch or fall below the triple potential moving average, which is an indicator of a strong downtrend. And finally, we want the price to be above both the triple exponential moving average and the regular one, which indicates the beginning of a trend reversal. Having fulfilled all these 3 conditions, we can enter a position on the first candles that close above both moving averages in this way. And if all these conditions are met, we know that the signal is valid and we can open a buy position here. So I will open a buy position here. To manage risk, we will place a stop at the low, and the recent swing is the level at which we expect the market to reverse, and if it continues to move against us. For take profit, we will focus on a 1-to-1 risk-reward ratio for 50% of the position and a 1-to-2 risk-reward ratio for the remaining 50%, meaning we are aiming to make twice as much profit as we risk for the second half of the position. Now let's see how trading happens. As you can see, the first take profit target has been achieved, which means that we can now move our take profit and is aiming for a risk-reward ratio of 2 times. After that, we will also move the stop loss without loss to avoid losses. Now let's look at another example of a buy trade. Here we see that the red line has crossed below the lower line of the Bollinger Band. The price has come close to the triple exponential moving average, and then rises above both the triple exponential moving average and the regular EMA, which indicates that the trend is starting to turn around. So I will open a buy trade here, following the described money management rules. Now let's see whether Wayno will break through the take profit target or not. As you can see, the price has reached our first goal and then the second goal for take profit too. I hope you understand the rules for entering a buy trade using this strategy. Now let's quickly go through the rules for entering a sell trade using this strategy. By the way, if you don't want to analyze prices on your own, you can join my free group on Telegram, where I share open buy and sell positions with her every day. The link is in the description under this view. And so in order to enter a sell position, you must fulfill the following conditions. Firstly, it is necessary that the red RSI line should rise above the upper line of the Bollinger Band. This indicates that the market is overbought. And secondly, it is necessary that the price touches or rises above the triple exponential moving average and EMA, which tells us about a reversal, and this means, in this case, the price should go below triple potential moving average and regular moving average, and which indicates a possible reversal. So if all three conditions are met, we can enter a position on the first candle that closes below both moving averages. However, we should also be careful if the RSI indicator crosses below the lower Bollinger Band that indicates that the market is oversold. In this case, you should not enter a position as the market may soon reverse again. However, in this case, this is not the case, so let's enter the position. To manage risk, we will place a stop loss at a recent maximum take profit target with a 1-to-1 risk-reward ratio for 50% of the position and a 1-to-2 risk-reward ratio for the remaining 50%. Now let's see how trading is developing. The first take profit goal has been achieved. This means now we can move our take profit and aim for a risk-reward ratio of 2 times. Now let's see how trading will develop, and I hope that this video has demonstrated some interesting and profitable ways to use the TDI indicator to enter positions. So that's all for this video. If you liked the video, please leave a like and subscribe to the channel, and don't forget to click on the bell icon. Thank you for watching the video to the end. See you in the next video.
Bye.